all right. We live, we live. Welcome everybody to another Tim's Tidbit. It's a Tim's Tidbit takeover. When I start to hide him so that y'all couldn't see him and be like, man, Mark has some business come up. And so y'all pull up on YouTube, get to YouTube. I already see people over there. People was in there at 122. Somebody was in there. Jay Ortiz was in there at 122. Talk about happy Sunday family. Happy. Come on, man. Y'all don't give me this kind of love. You know what? Show over. We ain't gonna do it, Mark. Forget it.
Hey, like it was the other day in the chat. Look, I'm just here to learn. I'm just here to listen.
Hey, y'all know what it is, man. Hey, Mark gonna be here. He a busy man. We ain't gonna hold him up. So what I'm gonna do, I'm gonna pull up, get out of the way. I'm gonna pull up the disclaimer. Y'all see the disclaimer at the bottom, but I'm gonna pull it up anyway. Spider Gang, y'all can say it verbatim with me. Y'all already know what the lick read. Let me share my screen and we gonna go through the disclaimer. Replace since Mark in the building with us, replace the eyes with we's as you say it. You know how Dora Explorer be like, say it with me now. Everybody say it with me now. Replace the eyes with the we's. Come on, screen. Okay, here we go. Y'all ready? Share screen. Where my StreamYard go? There you go, StreamYard. All right, y'all ready? Here we go. Y'all see it at the bottom of the screen, but now y'all gonna see it on the screen. Y'all ready? Say it with me now. Here we go. At the stream. Disclaimer. Let me blow it up for the people in the back who got eyes like me. They got the old man eyes. We gonna blow it up and say it together. Disclaimer. We, don't say I, say we. We are not financial advisors. We are not fiduciaries. Nothing that we say should be taken as financial advice. Do your own research. Investing involves considerable risk, and you should always consult a financial advisor before making any investment decisions. You feel me?
I feel you.
You feel me? Okay, man. I'm gonna stop running my mouth. Everybody know who this man is right here. All of the come up cousins know who this man is right here. And hold on. We got about 100 people already.
Word?
Man, the love is in the building today.
They love you.
Is it me?
I think so.
Oh, okay. My mama in here. My Mark, this is my mother right here. Esther Rogers. Say disclaimer. She gonna make sure I get my disclaimer out there. This mama, hey Pumpkin, this Mark Monroe. This is the guy that turned your son on to options, and this is the guy that he gonna change. He gonna close the racial wealth gap in one generation. Him and Lady Jolene GC and the rest of the come up cousins. You feel me? All right, man. I'm going to yield the floor to Mr. Mark Monroe. For anybody that's tuning in on the replay or anybody that's tapping in right now who don't know who this young man is, yes, I say young man because I'm going to be 50 on my birthday. So everybody in the chat is a young man and a young woman to me, except for my mama. Love you, baby. Hey, this young man right here, he's a philanthropist. He's a tech startup giant. He's a VC. For anybody who don't know what VC is, he's a venture capitalist. He's a husband. He got a lovely son of a dog laying in the back there named Butter. He got his own little doggy bed. They call him the Dark Knight. They call him the new T'Challa. They call him Mark Monroe. Everybody, please give it up. Clap it up for Mark Monroe, ladies and gentlemen. Mark, the floor is yours, my guy.
I'm just Mark. All right, what's up, y'all? So, Tim, thank you so much for having me. Phenomenal show, and I just feel honored just to be on the stage with you and to just share some awesome pieces of information, aka tidbits, alongside with you. So, thank you, brother, for allowing me to share the stage with you. Okay, so I know that you talk a lot about technical analysis, and so I would kind of be remiss though to I feel like it's time that we kind of share something today, don't you think? I think it's time that we give him a full breadth of things.
Yeah, something a little sauce.
So just a little bit. So one of the things that we find out that's pretty cool that a lot of folks don't really have access to is the Bloomberg terminal. So the Bloomberg terminal, for anybody that doesn't know, like if you ever study finance or business, you normally study up the Bloomberg terminal, where it's like you get access to real-time information, real-time data, technical analysis, and everything else. Typically, it's the same type of tools that the folks on Wall Street use. Now, you can do the Discord, the Walter Bloomberg Discord, which gives you some of the information, and it can update as the Discord servers update and gives it to you. But I believe that we can do a little bit better than that. So today, I haven't done this on the Come Up Series show, so I'm doing this specifically just for you, Tim.
Tim Tidbit exclusive.
All right, so let's go ahead. I have the share screen up. Let's go ahead and do it. So I want to introduce you all to a service called Koyfin. Now, I'm not trying to sell you guys on anything, because of the fact is like they have this cool part of the platform. You guys know me, you know how I operate, so I like to give away tools for free that I believe that are of great value. And I believe that this is one of them, because Koyfin happens to be a startup that's ultimately trying to literally take that market share from companies like Bloomberg's terminal, in which that it makes it available to the everyday investor. So what are we looking at here? We see this beautiful screen in which that literally gives us, what's currently happening in today's markets, the market news, market movers, if you have a watch list, the typical stuff that we normally see in other places. But look at what I'm surrounded by. I'm surrounded by the U.S. equity sectors. Now, if this was happening in real time, and if the market was open, I would literally be seeing flashes taking place on my screen as we see it. But of course, we're seeing what happened on Friday's activity in the market. But I get to also see what's taking place in global markets. So emerging markets, China, Russia, Mexico. Well, Russia's kind of like, stagnant. So I don't even know why they're still here, but whatever. But then it's like we also have currencies. We also have commodities. So we can see it all in one home screen dashboard. Now, of course, this is cool. But the interesting thing is we also get to see the full breadth of kind of like if you were looking at it from a Wall Street perspective. So let's go a little bit further, and I kind of like did a quick little run through with Tim. So let's go check out one of my favorite companies. As you guys all know, if you know me well enough, already know it sits at the top of the list. I'm a Tesla fan boy, if you want to call me that, or if you want to just say, pretty much very, very bullish on Tesla. But interesting thing is, and I don't know if you know this, Tim, but 70% of my portfolio is dedicated towards Tesla or things that have Tesla within it. So okay. I'm making a huge bullish bet that essentially that Tesla is going to be that company that moves everything forward as we consistently move into the future. And how did I put all that together? Well, partly by coming to a place like this where I can literally get a well-rounded scope and perspective of what is it that I'm looking at. So what does that mean? So if I look at the snapshots, right, I can look at the overview of Tesla stock like I see on any different brokerage platform. So of course, but the interesting thing is I get valuation, capital structure, and then on top of that, performance returns over the last 1 month, 3 month, year to date, and 1 year. And then of course, some of the key data figures. And then of course, real-time news as it's running across the ticker. So as it says right now, apparently Tesla news is now being intertwined with Twitter news, of course, because of, the founder Elon Musk is literally making this bid to buy, and of course a portion of his Tesla holdings will be allocated towards that. But then we also get the analyst estimates as it pertains to sales and EPS. So this gives me an inside look for getting an idea of what those potential whisper numbers are when it comes through for the next quarter or moving forward for the next fiscal year, and where we are as it pertains to hitting those targets. But then let's go even further, because this is just the basic snapshot. But then if I go even further, this allows you to learn about, say, for example, what literally surrounds the company. So if you notice what I'm doing here is, and you'll see within this platform, Koyfin does a very good job of not only being able to show me the fundamental data, but it will also allow me to play around with a little bit of the technical data. And then on top of that, it also allows me to see some of the quant data. Now, if anybody sat in the matrix with me, you understand that essentially that I run everybody through a simulation, and normally I split everybody into 3 groups. Now, if you don't know this, then you're now learning a secret sauce as it pertains to how is it that I play, and then also how I think. I was first trained as when I first invested into the stock market on the fundamental side. When I became a trader in 2004, I had to focus on things from a technical standpoint. And then as I got more seasoned in the game, then I had to start thinking about it from a quantitative perspective, from a quant researcher perspective. And then when I started putting all three together, I started to become more dangerous. So this really helps traders, investors, whatever it is that you consider yourself today, tomorrow, in the future. This is a very big help in helping you move forward. So then one of the things when I was looking at potential like ways of, when I mentioned 70% of my portfolio is Tesla, now I had to start looking at, okay, well, where is it that Tesla is held in different ETFs? So in the US ETF, ownership is about 9.6%. It's also letting me know, like, okay, hey, the market value held by ETFs, and then of course the percentage of shares held by ETFs, and then of course there's 285 ETFs out there in the market that literally have Tesla exposure to it. Now, of course, it breaks it down based upon the weighting. That's, you know how I operate. I like to go for the gusto. So of course, XOY is represented at 21.46. The beautiful thing that I love about this is that also when changes are made, you can also see the changes update. If they're in real time, you can see them updated on this platform, so that way you can see the weight changes. Now, there's an interesting thing to understand about this when you think about ETFs, because a lot of times people think that I'm going to buy an ETF and it's like the ETF weighting will just stay the same. No, that's not how it works. So if it's an actively managed ETF, then you're going to see that those percentages of the weight will change. And that's based upon the discretion of whoever the active portfolio manager is. Now, if it's a sector related ETF that's, let's say, tied to, like, let's say the Select Spider ETF, then that's gonna compress, or it's gonna adjust as its market cap changes. Also, as, say, for example, there's a compression within the actual S&P 500, and also if their PE ratios get compressed and everything else, then you'll see that the weighting also changes. So let's get to that. Let's go through that. But before we do that, we can also look at price targets and everything else, and we can see exactly how the rating systems have changed over periods of time, and also look at it on a chart basis. Everything that which you can see here can also be charted. That's one of the beautiful things that I love about it. So then I also go to the estimates, where we go back to those whisper numbers and how those are developed. So now we're starting to see it, say, for example, on a yearly basis, that, okay, hey, this is where we projected for, say, for example, Tesla's earnings as it pertains to its sales. And then of course you can do it over EBITDA, EPS, and so on and so on. So in June, you can see that the number currently sits right now at 2.29 as it pertains to the EPS number. Pay attention to that, just like the same thing that you could pay attention to the earnings number being $18.37 billion as it pertains to an estimate. And then you get also the forward-looking stuff, so that way you can see that over a period of time, and that's how you can kind of calculate the growth of 61.1% in earnings growth. These things are going to matter because now you're getting an inside scoop to see exactly what those potential whisper numbers are, or start to get those figures of what the overall consensus is for Tesla to ultimately beat. And this is for any company to beat on the top and bottom line as it pertains to its earnings and what Wall Street is looking for. Now, can these things adjust? Yes. As they adjust, then you'll also be reflected also on the platform. Now, of course, we can see the trends. I mean, pretty much we're seeing that everything is spiking. And then, of course, we can get like new filings. So if there's new filings, significant events, news, transcripts, it's all here for you. And you can, again, see the adjustments. Now, that's just on the fundamental side, right, Tim?
No.
I guess this is true. I was gonna say, I guess this is truly a takeover.
No. I just had it on mute, and I'm soaking up game. Up game.
So now let's go to analytics, because y'all know how I am about analytics. Like, data, I believe, runs the world. Now, what they give you here is lots of charts, market scatter, and economic calendars. Now, y'all know that I've been like really heavy on economic calendars as of lately. So when we're looking at world economic calendars, as you can see, for Friday, we got X amount. Now, if we look at it over a weekly basis, now, of course, I can filter the country outside of just the United States, but since, everybody's really eyes focused on the U.S., I can see exactly not only just like, a Bullard speech that's going to take place on Monday at 4 p.m. So at market close, one of the individuals in whom which that is either, I think he's hawkish on the market. So again, this will probably matter. And I can kind of get an idea as it pertains to what the consensus is, as it pertains to rate hikes. But then also we could see auctions, and then of course everything else as it pertains to economics. Now, as you can see, Wednesday and Thursday are naturally your most jam-packed days when it comes to economics. So it's no surprise that when you see the market does what it does on Wednesday and Thursdays, you can kind of put them together, because to think that the economics don't really matter. These are the two particular days specifically that Wall Street is highly paying attention. Friday is kind of like just a runoff of everything else that's there. But then at the same token, it really starts with Tuesday to get the party going. But really, it's really jam-packed within Wednesday and Thursday. And you can typically see that across the board, that Tuesday through Friday. So Monday is very inactive, but normally it's very much so Wednesday. That's normally your most jam-packed day across the board. So that gives us a little bit of something. Now, if we look at lots of charts, for those of you that like to kind of be able to spot trends and everything else, and possibly even see potential formations of a potential opportunity. So for example, I see that, we saw that Netflix had gapped down from, I think it was 318 or 348 all the way down to something stupid, I think it was 212 or something, 212. So then we also have multiple companies here in which that we can see across the board. And of course, I can go through the entire NASDAQ 100. And if I don't want to just go through the NASDAQ 100, I can also go through the S&P 500 core as well. And then if it gives me quarter to date, month to date, or I can also do year to date, or just do it, say, for example, over the last 10 years. This is pretty cool, because then I can also filter it by sector. So if I want to be focused more so by a specific sector, just to say, okay, hey, well, if I'm looking at it year to date for the energy sector, for some reason they don't have data for one of those specific time frames, so that's interesting. But if I was looking at it, you can kind of start to see that there's some outliers here within, say, for example, the energy space. So as I look through this chart, you see that some are on a somewhat of a downtrend and taking a breather. Meanwhile, others, if we looked at before, they're still somewhat on an uptick trend. So it's something to be attentive to. But again, it's it makes a part of the story. These things all put it together for you. So that way you can kind of say, okay, hey, well, where are we in the grand scheme of things? Then there's one that I kind of had the opportunity to share with Tim before we went live, where we're talking about market scatter. So this is something that I kind of like. Like I said, I'm a data guy. So again, what I did was I took the PE earnings. So pretty much over the next 12 months, and I put that on the x-axis, and then I put the RSI on the y-axis. So this represents from the top to the bottom. This represents the RSI. And as you can see that we're in areas in which as you can see that we're starting to get a cluster of companies that are starting to become oversold. Now, if I put the entire S&P 500 in there, now it really starts to put everything into great deals of perspective, where you're starting to see that the RSI is getting to a place where you're starting to see significant amounts of companies, even look at areas like State Street, where you're starting to see that they're starting to reach an RSI where it's completely oversold. But then you also have companies out here that are completely, say, for example, not oversold, but look at their PE multiples all the way out to, I think it's 235x over the next 12 years, or over the next 12 months. To put it into perspective, Tesla has a forward earnings PE ratio right now of 78.9. So something for perspective. And again, I can break it down again by the individual sector. Now, y'all know me, I'm all about tech, and I'm all about consumer discretionary and a few others, but I'll just leave those there because I don't want to overfill it. But we're starting to see that a lot of these companies are places in oversold, but then we also have some companies that are reaching a place of overbought, like AKA IBM. Now, of course, they had a very blockbuster earnings, but now this company has gone for a significant run. I would not be surprised as an investor or also as a trader where this company probably sooner or later starts to take a breather. Now, let's go to that for a second, shall we? So, like, let's say if I want to pull up an IBM. So now I'm going to pull up an IBM. Oh, wait, it only allows me to share one screen. Okay, that's fine. Okay, so I'm going to pull up IBM here. So we're going to pull up IBM on the equity chart. Give me one quick second. And we're going to pull it up. And we're going to just look at it from a standpoint of, let's just look at it from a free graph template. Okay, so as you guys can see, if we're looking at IBM, you can see that we've completely gone on a significant run in IBM, and now you're starting to see that we're getting to a place where we're in overbought territory. So I wouldn't be surprised if we come down to about a 130, 136 to essentially come down and take a breather for the short-term period. Though, do I believe that there's still more upside for a company like IBM in the near future? Yes. But I think that ultimately that love may possibly be spread around, especially if we see that if earnings are not as bad as we think that we see for some of the other companies, either within the communications technology, consumer discretionary, and also in the industrial space, we'll probably start to see that that starts to broaden itself out where other investors start to say that, maybe this isn't as bad as we think it is. So I guess that's what draws me to probably my next thing that I'm kind of like paying attention to. And I guess I could stop sharing screen here, Tim. So things that like, and I kind of mentioned this when I was hosting a Twitter Spaces a while back. One of the interesting things to look at, especially like we ask ourselves, well, why did a company like Netflix, why did they drop so heavy? Like, why did they just fall out of the sky? And remember, in this type of an environment, especially when there's a lot of things that are being discussed, there's a lot of, say, for example, either anticipation or nervousness in the market. You can't really make these kind of mistakes. So, did Netflix really make did they really make a very bad mistake? No. I think that had we not seen like services cut in different areas around the world, I think that honestly it wasn't going to be as bad as we thought it was going to be. You know, now Netflix is getting to a place where they're at the point of the law of large numbers, and I think that that's definitely going to be something that's going to impact. And I think that when you're looking at any company and moving forward, you need to have those same type of goggles on of one, for the time being, are their best days ahead of them or are they behind them over the next 12 months? Especially in this market where you start to see that, okay, hey, we're looking for any potential reason to believe that, okay, hey, that we're going into a recession. And the first thing that we look at outside of the, the normal, economic data that we normally get on the federal side, we look to companies. We look to, they don't really look to startups as much. The only thing that they look at in the startup world is, has funding slowed down for startups, or is it still growing, and is it still growing at a pace? But there's so many nuances in that. Like, for example, how many companies in the US are getting funded versus companies around the world, abroad, that are getting funded? Are there more opportunities starting to show in other areas internationally versus the US? It doesn't mean that essentially that, it's bad here. It just means that, opportunity is where opportunity is seen, and where's the investors want to put their dollars. But then we look to companies on the publicly traded side because they have direct access to the consumer market. They really enforce and influence, and many times they are the consumer market. So, for example, if we see a company like Costco, where the bar is not set very high, but we already know that wholesale prices are up, and if we see that inventories are, say, for example, being challenged, then essentially, where does that place us for a company like Costco? It's level for entry as it pertains to them having a great quarter. It should seem that the bar is not set very high. So anything that comes below that bar of expectations and earnings, then you're going to see companies get punished for. And the same thing goes for tech companies, especially in a PE multiple compression environment like we're in right now. You have to remember, a lot of these companies have gone on massive runs over the last 3 years. Like, we're at significant highs over the last 3 years. Your normal company would normally grow at a rate of, 15 to 20% year over year. Your S&P 500, which, really less than, 8%, actually beat the S&P 500 benchmark. So again, we're getting back to a place of normalcy where it's like you're not going to see companies like that go on significant runs as they used to. Now, is it going to be forever? Probably not. But the thing that investors are paying attention to is, okay, here's my low bar of expectations in which that I expect. Here's my high bar that you've got. Like, yo, if you meet the low bar, okay, hey, we're not going to penalize you as much. If you come below that, then okay, that could be a sign that there could be a problem within this space. And then also, is this really enforcing what we're already hearing on the larger macro economic perspective? And if that's the case, investors get nervous. If you are, say, for example, you met the low bar, but we kind of already knew that you were going to meet the low bar. So we want to see how close, and this is really going to be about your tech companies and consumer discretionary companies. Here's this high bar where, like, it's not as high as it used to be, but it's still high. Can you come close to that? If you can come close to that or exceed that, great. If you cannot, okay, now we got some issues, and now we got to start thinking about, like, okay, hey, are there any other players that we could potentially rotate to that provide us a better opportunity, that are cheaper? It's really in this market now where you're going to probably start seeing, from now until June, you're probably going to start seeing the buyers are ultimately going to be bargain hunting. They're going to be hunting for bargains, but yet at the same token, hiding out in safety within value stocks. So, for example, I'm probably guessing if you're looking at, well, not guessing because I know, but if you're looking at consumer staples, energy, areas in which that normally don't get a lot of love, but yet at the same token, they still produce cash, then that's going to be a place where your investors are going to most likely hide. So it's no surprise that you see that these sectors are literally screaming to like significant highs for the year. But at the same token, when things start to balance themselves out, and when the market has already received a little bit of clarity, but now as it starts to gain even more clarity as it pertains to sense of direction from the Fed, as it pertains to sense of direction of what's happening on the economic side, is the sum of all fears really here, or is there very less for us to fear? Then at this point in time, now investors are going to say that, well, second half of the year is going to be a totally different ballgame. I mean, and it's not just individual investors. So I want you guys to understand that it's not just the average individual retail investor that's also hurting in this market. You've got funds. Like there's a fund that like literally had $17 billion in AUM, and then that AUM got literally cut to $1 billion. Like that's how bad of a quarter or a set of quarters that they've just recently had. So to believe that essentially that it's only the small retail investors that are losing right now or that are ultimately feeling the pressure, that's not true. There's a difference, though, between the small and retail investor versus, say, for example, your Wall Street manager, or your portfolio manager, or say, for example, your Wall Street trader. You have time. You don't have anybody looking over your shoulder. You don't have anybody saying that you got to meet this quarter. To them, they're very much so performance-led. So if you understand that that's the type of now market that you're in where everybody is literally trying to literally meet performance goals and performance metrics in order to keep their jobs, then start paying attention to exactly because it's very much so, I see what you do. I'm going to possibly take slices of that and also add that into the thesis. Start looking at it and you'll start to see that there are some trends that start to formalize and you're seeing exactly where the money is going. You'll be able to see where those inflows are going, or you'll be able to see where those outflows are going. And therein it kind of starts to paint the whole picture for you from not only the fundamental standpoint, because a lot of the fundamental analysis, a lot of it the narrative really hasn't fully changed for many of those great companies. Now to some it has, but for a vast majority of companies it hasn't really changed. The question is the consumer market or is that business market still there? Is the business model fractured a little bit, or is the business model very much so intact and it just has to ride it out with the rest of the market? Those are the questions in which that we look at from a fundamental, and then if we look at it on a technical analysis side, we're really just watching levels. We're really just watching levels itself, and sooner or later, like I said, my guess is second half of 2022. We'll probably start to see a much more bullish run going into the close.
Man.
I just said a lot without no water.
Man, that's why I was like, we done got into about 30 minutes and you ain't took a sip of water at all, and you done gave out so much game right now. I'm gonna call it. I'm the ref. I'm throwing in the towel. The corner got to throw in the towel. It's a TKO. It's a TKO. I'm calling it right here. I'm calling it right here. I appreciate you pulling up. I know you're a busy man. We had 30 minutes right now.
Oh,
I'll say we gonna get 3.5 minutes for anybody that want questions. So that means
let's
only
do
one or
it.
two of y'all gonna be able to ask a question.
No, I got time. I'm over here like today. I got time, cuz today I got time.
All right. We had 30 minutes right now. Mark done gave us all this. He done gave us all this game. Mark and Lady Jolene been lacing us up since 2020. So
Yeah.
it shouldn't be a whole lot of, you know what I'm saying, outstanding questions. So we gonna ask Mark to stay around for 10 more minutes, and we're
Yeah.
gonna let y'all ask questions. Right?
So Michelle said, I thought consumer discretionary was supposed to be a poor investment during high inflationary periods. Tis true because of the fact that we're looking at a lot of the retail players. But at the same token, you have two juggernauts now within the consumer discretionary space. One of them being Tesla, which is literally like, throwing haymakers out here at Ford, GM, and the rest of the players. And then on top of that, you have Amazon, which AWS. I do not see that stopping. I think that if anything, this is going to be a reinvestment year for Amazon. And on top of that, I think that a lot of its initial investments will really start to play out this year, especially when we think about some of their physical space investments, especially now that you start to see that people are going out and going more so into stores. I think that that's going to be a huge opportunity and upside for Amazon. So with those two alone, and then of course having Home Depot in a high inflation environment, when you look at the housing market, which housing inventory is still low, you see a lot of home builders out there that are definitely delayed because of the supply chain. So then that ultimately drives the prices and that gives Home Depot pricing power. And if you look at, say, for example, their profit margins and compare them to their competitors of what Lowe's and some of the others like Granger, they're still coming out on top. And of course, they've done a very good job on their own for supply chain and logistics. So again, huge opportunity there just within those top three. Oh man. Does Koyfin have coverage on options? No, but here's the beautiful thing about Koyfin. You can submit them feature requests and then they actually listen. So I know that they're working very heavily on the app side for the platform. But at the same token, I know that options is definitely coming soon because I saw it in their developer board. But yeah, if we see options in there, then Tim, game's over.
That's it. It's over. It's over.
Has my S&P end of year target changed with the Fed wanting to go to a neutral rate? No, because I knew that the neutral rate was going to come. The Fed's role is always to bring the markets to neutral. But it's probably looking like the lower end of my target is starting to seem like it's really starting to bake itself in and really start to get very comfortable and cozy. So if we're looking at the 5100, 52, unless we just like literally see like by the hand of God that, Russia invasion Ukraine literally comes to a stop. And then on top of that, it's like we start to see supply chains really just start to peel back, which ultimately literally brings down some of that fear of recession. And then of course, it's like at that point in time, you'll probably see bond yields ultimately get in formation, come down. And then, of course, equities now becomes a thing. Oh, well, thank you, Brendan.
Yeah. We got 4 more minutes.
Oh,
My
okay.
bad. I'm still on. My mic ain't muted.
It's all good. It's all good. With AMD acquisition of Xilinx, will their earnings include the combination of both companies? So it all comes together as one company. But we should start seeing that those revenues for AMD should start changing alongside with, pretty much you'll start seeing that those profit margins will also start to change as well. So I would probably say that deal will probably, like, the deal is officially done, but I probably would say that those revenues really won't start to solidify themselves till around Q3. Okay, with the hits XLC Holdings have had this year so far, what's the likelihood of them regaining its peak? I've got it coming to approximately 90 by year end. That's huge because the biggest thing that you're going to be looking for is for Google, Facebook, or Meta to ultimately come back and save the day. Also, pay attention to some of those telecommunications companies. Like, take a look at Verizon. Um, but yeah, honestly, it's going to take some time because, of course, Netflix like really just dropped a sour bomb on the communication sector. The biggest thing that we're looking for is one to see, like, if Netflix comes out and like literally tells you that there's a new business model that's coming forth. Of course, you're going to see users drop off, but at the same token, more opportunity. I've already stated my piece of what Netflix should do, and I really stand firm on that. I think that they should make a pay per user if you have extra people within your group. And then, of course, they need to have a merch store. I don't know why they don't do that, but, hey, God bless, I don't work there. I think that if we see strong revenues from both Facebook and Google, that should probably change the direction of the communication sector. Um, but yeah, that's the biggest thing that the communication sector needs. It's literally relying on Facebook, Google, and Netflix. Netflix already dropped the ball. If one of the other two drops the ball, then it's curtains for the communication sector for the year. You mentioned earlier to see what the big boys are purchasing to possibly adjust your thesis. Do you have any recommendations of resources to see what the big boys are buying up? Yeah, so you can check
Hold
out
on,
Well
hold on, Mark.
Wisdom.
Hold on, Mark. Hold on, Mark. Hold on.
Oh,
Rashawn,
uh,
you put a whole dissertation in there, man. Come on now. You put a whole dissertation in there. We, that man just talked for 5 years, put short questions in there. Hey.
well, I mean, yeah, you can. You can literally go to like Well Wisdom. And that's free too. You can like check out the 13 Fs that come out and see exactly what they're buying. But keep in mind, it's a lagging indicator of what they have been doing. But what you can do is, I think they have this chart system on that platform where you can start to see the trends of the sectors in which that they're buying, and that's huge.
All right.
Or the trends of the sector or the company.
Last two we got Kashaya, and then we got Mike.
Oh man, Kashaya on the earnings. Oh man, I love it when people always ask me this. Um, So again, it's all about seasonality. I think that seasonality is still going to play a role here. And again, it's more so in the sense that bend but don't break. That's the thing that we got to look at for the earnings, the heavy hitters of earnings that are coming forth this week. Bend but don't break. If they break during earnings, then yeah, you could definitely see that, like, whatever the thesis is that even that I had, it's probably, it's going to be crushed. But a lot of these companies aren't expected to have blockbuster earnings because this is normally the time of the year that their earnings aren't that blockbuster. The companies that you see coming through this week and probably the week after, they normally have great earnings coming into Q3 and Q4, and then maybe Q1. Um, but for the most part, yeah, you don't really expect anything solid from them in Q1, Q2 because that's normally around the time that they're ramping up for everything, building up inventory so that way they can take on everything at the end of the year. So I would probably say for them this quarter it's about bend but don't break. But then especially if we see travel coming back, and it has been back, and if business travel is up, then you're going to probably see that some of these companies are going to do very, very well. The question is, has that advertisement spend between travel and leisure come back to places like Facebook and Google? That's going to be the big question.
Okay, I said Mike, but I had skipped Boyd. I'm sorry, Mike. Boyd gonna be the last one. Even though Boyd get on my nerve, he gonna be the last one.
S&P 500 4,000 before we recover. I mean, it's possible. Like, I'm like the type of person, I'm not really the type of guy to like literally try to call the bottom in things. I like to be exposed to things, and then if I still believe and if my thesis and conviction is strong enough, then it's like I'm going to take it on. Um, but it's a possibility that we can go down to, let's say, 4,000 in the S&P 500. But it also could be a possibility that essentially that we could find our footing this week because of the fact that if earnings growth or if earnings shows that it's strong this week, and we see that nothing is changing within the thesis of their guidance, then that's going to change the entire landscape of investors, especially now that we've gotten past, really one of the roughest quarters in quite some time. So honestly, it's like that's what the market is really looking at. Do we expect any of the narrative itself to change, or is everything still intact? And one of the things that my grandfather once taught me is sometimes when a person's staring there with a threat, if a gun is pointed to your head, sometimes those bullets in the chamber could be blanks. So the question is that you have to ask yourself in the sense of, okay, well, if earnings growth is strong enough, and if we're seeing that the narrative isn't quite fitting with what the reality says, then maybe maybe we just been sitting here being spooked off of just nothing but a narrative. But then now we have facts and data, and that's what earnings are for. It's perfect. And I probably guarantee that everybody on Wall Street is looking at earnings this week as the key barometer of where is it that the market is going next.
Man. I appreciate you, Mark. I appreciate. What I don't appreciate is this 236 cousins that pulled up, and on any given Sunday.
Well, make sure you guys subscribe. Make sure you guys subscribe. Like honestly, it's it's you have a great show and you have a great platform, and it's amazing, and it's a breath of fresh air just to see that hey, one of us is like literally taking the time to literally break down something that like really seems so foreign for a lot of folks. You're making it plain for a lot of individuals so that way they can understand technical analysis and they don't have to be afraid of charts. A lot of times when people just see that things go down, they immediately just think that, okay, hey, I need to run for the hills, I need to be scared. But that's when you don't have that's when you don't have the context, that's when you don't have the information. But now that you're giving that to the people, I think that that's definitely something that you should definitely, if you're watching this video, make sure you subscribe to that, because honestly, you're missing out on a wealth of knowledge and information. And with the information, that ultimately just helps you in your journey, because what we say at the Come Up series: the more you learn, the more you earn.
The more you learn, the more you earn. I appreciate people like you. You know what I'm saying? I get inspiration from you when I see people who don't have to just give back so freely and they do it anyway. Oh man, that does my heart joy. You know what I'm saying? People like you, people like P-Dub, people like Kiki, people like Boy, people like Lex, Draco, you know what I'm saying? Young folk, Lex, Quanty, these young people. I got daughters, Lex. I got daughters older than Quanty. You feel me? So it's like, man, I believe the children are our future.
Oh, Lord. Give it up for Randy Watson.
Hey, but I appreciate you, man. Hey, everybody, y'all know what it is, man. Hit the like button. If Mark says something that y'all like, share this with every cousin that you know. If he says something that you need to rewind it again. Share it with a cousin you don't know. If you ain't subscribed, subscribe. It's a whole lot of folk on here, so I know y'all can't be subscribed, because on any given Sunday, it just be me, my sweetie, Draco, and by Lex, and by 3 other people. You feel me? But yo, man, till the next time. Oh, we doing Tim's Tidbits for the next Monday. My financial advisor Dustin coming on. He's giving retirement tips. He's giving retirement tips, because I be talking about trading and technical analysis. Mark just laced us up with a new free tool that covers the gamut, whatever word I'm looking for. And then so Dustin gonna slide in on the first and lace us up with some retirement tips. You know what I'm saying? Everybody invest. But like Mark and Lady Jolene always say, it's for the long term, it's generational wealth. So what you gonna do when you start to get to be my age and older? You gotta think about that retirement. And then the 8th is Mother's Day. I ain't doing Nathan. I'm chilling with my sweetie. And then on the 15th, I think it's the 15th, the cousin Zay gonna pull up. May the 15th, the cousin Zay pulling up, and he gonna drop something I don't know what he's dropping yet. He ain't told me. Mark pulled up with the surprise. Mark, you know what I'm saying? He pulled up with the surprise. I can't even get off mute because I'm soaking up game. You feel me? I'm about to run this one back when we get done. And then after that 22nd, 29th, ain't nobody said anything about doing it. P-Dub lost his voice. Kiki, she won't return my calls. So if anybody else want to share anything, we got the 22nd and 29th open to do a Tim's Tidbit takeover. And if not, you know what I'm saying, I'm just going to get on and run my mouth like always. Hopefully P-Dub got his voice back by then and we can lock in the last 2 weeks of May and we can finish with the takeovers. Yeah. What Zay said? You should have went before Mark. Hey, I say, hey, Mark got some big shoes to fill because Quant burnt the house down and Mark came with the heat. You feel me?
Zay, you're going to do a phenomenal job. For anybody that doesn't know Zay, I mean, he's definitely going to give you guys a solid breakdown. So, Zay, you are all good, brother.
Hey, Zay, I told Tivo and AJ, you got to come through with a shimmy or something, because Mark finna do his thing. You got to come through with the shimmy. Hey, man. Hey, Mark, I appreciate you, my guy.
Thank you for having me.
I already told y'all what the lick read, so pull up next week and learn something about retirement. Get some retirement tips till the next time I'm gone.